Hello, everybody. Thank you so much for joining me today. For today's video, I want to cover some of the latest news on GM. Some new information broke this morning, and I think it's pointing to some struggles for the automaker that I think are signs of bigger things to come later on this year and into the decade. Let's go ahead and shift over to my usual setup. We'll use the flame pointer today because they might be going up in flames. I've used this before. From Squawk on the Street, CNBC, GM is offering buyouts to the majority of U.S. salaried workers. Phil LeBeau breaks down the news, how many take it, how successful this is, and whether or not this keeps the company from having to initiate some type of broader layoff. That remains to be seen. In case you haven't seen the clip, it's about a minute long. I'll go ahead and play it. I'll separate out the sections of the chapter below as well in case you want to skip forward, but let's go ahead and get you caught up.
Morning, Carl. General Motors will be sending an offer letter, basically already has sent an offer letter to the majority of its salaried workforce, offering voluntary buyouts. Remember, GM is in the midst of cutting about $2 billion. That's the target in terms of how much money it expects to cut this year. Essentially, it's looking for savings. And we've seen this with other automakers where they have either announced buyouts and or layoffs. And it was just about a week and a half ago that General Motors said that it would be eliminating about 500 jobs, salaried jobs around the world as it looks to streamline its operations. Now we know that the company is sending out an offer letter to almost all of its salaried staff saying there will be an offer for a buyout. How many take it, how successful this is, and whether or not this keeps the company from having to initiate some type of a broader layoff, that remains to be seen. But we shouldn't be surprised, guys. We've seen this with other automakers, and now we're seeing it with GM. It is moving to keep costs in line as much as possible. Back to you.
So based on Phil's guidance, it looks like GM has to make some changes. And this is something that they alluded to earlier in their Q4 earnings call. But one of the ways they're doing it is by offering employees to leave. So there's something that needs to be changed in the company. But the question becomes why? Why is GM taking this route when they're transitioning to EVs and theoretically they need all the help they can get, right? So let me kind of walk you through what I think is going on. Based on Q4's earnings performance for GM, they had flat sales in North America quarter over quarter, but they had more inventory build up in that same region, meaning that they sold about the same amount of cars, but that dealership inventories grew. So they had more cars in dealerships. This essentially means that the net sales, cars sold to the customers in Q4 were less than Q3. Even though GM was able to recognize it as a sale in their earnings, all they did was move inventory from their factories to the dealership network. And one thing to keep in mind is that Q4 is traditionally the best quarter in auto. And there are many things that are impacting why Q4 was softer. Interest rates, the economy slowing down, the affordability of these things is becoming harder and harder to buy a new car because it's becoming so expensive. But this was a big signal that we covered on this channel about a month ago that said, hey, there's this thing going on that's called channel stuffing. GM is starting to move products from their factories to the dealers. They get to recognize it as sales, but the sales to the customer, how many cars are actually selling to the customer, is much less than perhaps can be immediately seen from these decks, from these slides that they show on their earnings reports. We knew this back in November 2022 when we looked at the dealership lots inventory that GM had for their brands. So we looked at Chevy, GMC, Cadillac, and Buick, which are all GM brands. Chevy was at healthy supply at 60 days inventory back in November. GMC and Cadillac were above healthy inventory, and Buick was significantly above healthy inventory. And this was as of the end of 2022. I should have a refresh chart of this starting next week that will explain where we are now. I can guarantee you that it's going to be way worse than this because the auto segment is slowing and has been slowing since November. There's also a huge thing going on here that broke in March 1st, which is GM pausing full-size trucks plant to maintain optimal inventory levels. So this was their best-selling truck, basically one of their best-selling vehicles that GM has. They had to shut down the plant because of these dealership lots being too full. If we read the little subject line here, the company says that the 2-week scheduled shutdown of its Fort Wayne, Indiana facility, which builds the Chevy Silverado 1500 and GMC Sierra 1500, which I know you know, these are very popular trucks in the United States, is a result of increased production amidst steadying demand. But I don't know. That I don't believe that's the case. I think it's people are just buying less cars and these dealers are full. And, you know, believe these companies sometimes say one thing, but it's actually the other one. They don't want to make themselves seem worse than they actually are. If you're enjoying this so far, we'd love it if you throw me a like. It helps the YouTube algorithm show this to more people. Thank you very much. So the other thing to also keep in mind that's very important is that GM makes its money from SUVs and trucks. So it's pausing production on the thing that is making it most of its money, which is the pickup truck. A lot of these legacy automakers, their bread and butter is pickup trucks. And they also happen to be their most expensive cars. They're the hardest ones to afford. They are, I don't know if you ever went to a dealership lot to try and buy an SUV or a truck. It's pretty expensive now. This is amidst an economy, at least in the United States, that is displaying these different metrics, which do not bode well for affordability. We have record $16.5 trillion in household debt, record $11.9 trillion in mortgages, record $1.6 trillion in auto loans, record $986 billion in credit card debt. Total mortgage debt is now more than double the 2006 peak. Meanwhile, 36% of Americans have more credit card debt than savings, with balances rising at the fastest pace since 1999. This is all while mortgages rates just hit 7.1% and credit card debt rates hit a record 24.9%. So the economy is not doing great, I would say, based on these metrics. But the clear sign here is that it's becoming extremely difficult to afford a car, period. And we're starting to see the signs, at least from GM, I believe, by their massive slowdowns, layoffs, which are going to happen here either through buyouts or forced layoffs. And then you also have pauses in production at different plants. This is amidst the fact that the average new car price right now in the United States is $50,000 per new car. How does this bode well for a company like GM or others that are not, Tesla essentially, that are saying new cars in a market where affordability is becoming harder and people do not have the money and have too much debt to afford a new car? And the key thing that's happening here that a lot of experts have talked about is that, well, the car market is cyclical. You're going to have these slowdowns, then you're going to have these speed ups. You're going to have humps on the road, and then the car companies will decide what the new thing is. So the key question becomes, what will the cycle be? What will the cycle to? What's the next one? There's two really big ones here. I believe it's compelling EVs, which we have data for that we're going to cover in this cover on this video, and then you also have affordable cars. So those two things I believe are going to be the next cycle: EVs and cars that are not freaking $50,000, something that people can afford, because people are becoming strained, especially in an environment where the Fed keeps tightening rates, which slows down the economy. More people lose their jobs, harder to afford a home and a car, so on and so forth. So how can I say that compelling EVs are really in demand? Year over year in 2022 versus 2021, Tesla was basically the only car that grew year over year in the United States because of its Model Y, and every other car maker shrunk. Basically, GM was essentially almost flat, a little bit up 3%, but every other automaker shrunk, some of them tremendously. So there is a clear shift, I believe, to EVs versus gas cars. And we're just getting started based on Tesla only selling 1.3 million cars last year versus Toyota's almost 10 million. But there's also a gap in compelling, affordable cars that make money. And this is where the bread and butter is going to be for this next cycle. If we're in a situation where people can't afford cars, we need cars that people can afford. This is even more compelling and more important if they are an EV. So if you have an affordable EV, it's going to be something that's going to sell like crazy. So the question will become, how many car makers can do this? How is GM positioned to be able to take advantage of this? I think once we go through this, it's going to become clear that they're in trouble. So here's a sampling of the cheapest cars, trucks, and SUVs and EVs that are the most affordable in 2023. We have the Versa, the Niro Hybrid, the Venue, the Chevy Bolt, the Camry Corolla Hybrid, the Model 3 EV, the Ford Maverick, and the F-150 Lightning Pro EV. So the key thing to keep in mind here is that the only car that Chevy has that's tagged as most affordable, cheapest in 2023 is the Chevy Bolt EV, which has sold about 100,000 units in 2023. and 2022, excuse me, and it has just come out of multiple recalls. One of them because of a battery, and another one because of something else where the Chevy Bolt suffer from recalls. Okay, so that's one thing to keep in mind. Before I go a little bit further, if you do want to support the channel, I would really appreciate it if you click on join right below this video. You gain access to exclusive content on Fridays, plus my private Discord community filled with nerds just like me. So if you want to support that, you also get those perks. Thank you so much. So let's think about GM within the context of, okay, what's the next cycle going to be? How are you going to transition to EVs? How are you going to transition to affordable cars? GM made this statement late last year in November 2022, where General Motors says it will stop burning cash on electric vehicles by 2025. This was a statement from GM to the press. The largest automaker in North America is laying down a marker for itself to sell 1 million EVs annually by 2025, but it won't be easy. So what does this mean? This very affordable car that they have in the Chevy Bolt EV is not making money. And this is going to be a huge sign, I think, that's going to point to which car makers are going to survive this decade and which ones won't. And so GM themselves have said that, hey, our affordable car that's going to position us for this next cycle isn't even making money and it won't for another 2 years. And they need the scale to get there. So if we read a little bit further, General Motors just in the US last year sold about 40,000 cars just in the US that are electric vehicle only. That's 1.7% of GM's total volume and the best year ever for battery electric vehicles. Currently, GM does not sell any plug-in hybrids in the US. So this is just EVs. So put this within the contrast of them trying to sell 1 million EVs by 2025. And just last year, they sold only 40,000 EVs in the US, which is their second or largest market. So really, in theory, the GM has sold about 100,000 at best EVs in 2022 in the entire globe. So GM needs to 10x their production to break even on cars in 2 years for those EVs, right? So the question becomes, what's the likelihood there? How likely is that to happen? If we look at GM's lineup of cars that they're going to be leveraging to try and make this happen, you have the Lyriq, the Blazer EV, the Bolt EV EUV, the Equinox EV, Silverado EV, Hummer EV, and the Bright Zevo, 600 and the 400, which are vans. So these are vans. The GMC Hummer sold about 500 units last year, or I think 800 units, less than 1,000. I think it's sold less than 1,000 units total since its inception. Doesn't seem like a big one that's happening there. We already know the limited production for the Bolt EV, which is not making them money. And then we have the Lyriq, the Blazer, the Equinox, and the Silverado, which they're starting to ramp going into 2024 and 2025. The starting MSRP for these cars for the Blazer EV, as an example, is $45,000. The Lyriq is $59,000, and the Silverado is $40,000 estimated. I don't think we have official numbers for that yet. So it looks like Chevy has some cars that could be deemed affordable, especially with the EV tax credit in the Silverado EV, especially, and they have a really big one with the Equinox EV that's starting at around $30,000 that should be available in the fall of 2023. Let's see how it does. I mean, this is a cool looking car. I think it should perform well. But the question becomes, again, what's the likelihood that Chevy reaches 1 million EVs in 2025 so it can actually stop losing money on these cars, especially within the context of an economy that is not performing well and is seeking, I believe, affordable EVs? Is this the only car plus the Bolt that's going to get them? Maybe you can add the Silverado EV if it's a well-performing car. But will these cars allow them to reach 1 million EVs by 2025, given the supply chain challenges and how hard it is to make an EV, as we've all learned? What's the likelihood their EVs are compelling and profitable? That's another big question. Just because you're making them doesn't mean that it's a guaranteed success. You have to prove that it's compelling, and you also have to prove that you can make money on it. So this is another huge question that GM has to answer in the next 2 years. Why isn't GM moving its talent to work on EVs? Instead, they are asking people if they want to leave. And this is why I made this video, because it's very strange that you would have a company that needs to transition, that always boasts about its talent, that is just randomly asking people if they want to leave. Why is that? Why is that? Why isn't the company honing in on what they need and act, right? I can only speculate and say that GM doesn't know what they have. They don't know what they have. Why would a company in their position do that? Just an open-ended question. I would love to hear any of these questions. Please drop a comment below, positive, negative, feedback, whatever. I would love to hear your thoughts on these points. And then you also have this backdrop that from multiple companies where moving to EVs is extremely difficult and not as profitable as it seems at first because it requires a ton of work and a ton of innovation. As an example, Lucid, which we've covered before in this car, that's losing about $185,000 per car made. They're losing $185,000 per car made. The luxury EV maker Lucid appears to have a demand problem, especially with the recent Model S Plaid price cuts. Newcomer is having a huge problem entering the EV market. Rivian shares fall as EV maker looks to raise $1.3 billion in cash amid growing demand concerns. Again, Rivian, a brand newcomer, awesome car. So is the Lucid, super cool. But they're struggling to not only make money, but to drum up enough demand. Are people going to be there to buy those cars? Are they compelling enough, especially in respects to, say, a Tesla, which is going to be their direct competitors? And Rivian is a company that's very well funded and has a ton of talent. They are struggling as a newcomer. Then you have Ford, Jim Farley, another legacy car maker. Ford's entrenched problems complicate CEO Jim Farley's EV future. Costly traditional business threatens company's goal of becoming a top maker of electric vehicles. And this is something that Jim Farley was very transparent with, that it's very difficult for Ford to go into the EV market because of all the costs that are weighing them down transitioning to it. And Ford is way farther along than GM, and they're having challenges. Right? So what does that mean for GM? Then in the case of GM, you have a company with its current leadership that decided to enter into a partnership with Nikola. And I don't even have to tell you all the different things that are happening with Nikola, with its leader that is allegedly committed fraud. And the product is vaporware. It doesn't exist. There's so many different things with Nikola, but I'll just leave it up to you to make a decision. This is just what I've been reading. Then you also have their most affordable EV with the Bolt that had a recall, right? Because of its batteries and other things as well. So you have this thing that's supposed to be their crown jewel of transitioning into this EV future that has had a ton of problems as an experienced automaker. So what does this say for GM's chances of survival into the future? But they're making money, you know? I'll hear, but they're making money. Look at their statements. Look at their profit margins. Look at what their net income looks like. They're making money. They're doing great, fantastic. But for how much longer? For how much longer? When you have an economy that's clearly strained, you have a company that has had questionable decisions around its products and acquisitions. You have a company that reported its Q4 earnings in a glowing manner, and all of a sudden they are just asking people if they want to leave. And there's clear signs of strain of them being able to sell their cars into the market by shutting down your best-selling cars factory. That says something, right? But really what I want to know with this video is, what do you think? What do you think in the comments, right? Let me know what you think about these pointers, these questions. I'd love to hear your thoughts. And then for how long will this statement hold true? And this is really what it comes down to. For how long will this statement hold true for GM? I would love to know. I would love to know. My gut tells me that GM's in a world of hurt. These are just the first signs that we're starting to see of the legacy automakers truly going into a very difficult transition. They'll probably blame it on the economy. They'll blame it on the interest rates. But in reality, I believe is their lack of investments into EVs early enough that are affordable. And once a player comes through that has that in spades, Tesla, okay, I don't have to tell you what's going to happen. Some merch in the store if you're interested. If you want to support the channel, I'm not wearing one of those today. I'm just wearing a Game of Thrones shirt. Shout out House of Dragon. But if you're interested, I have a link for that below. And I also have a link for my favorite supplement, Athletic Greens. You'll get travel packs for free as well as vitamin D. Do recommend that you do that. It's really changed my life for the better. Thank you so much for watching this video. I hope it was informative and helpful. Do let me know what you think in the comments, and we'll see you in the next one. Take it easy, everybody. Bye-bye.